What's going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So CHPY is down a little bit. So in the past 5 days, it's down 6.01%. In the past month, it's down 16.85%. So it was at a peak of 88.14. I think that was the best point it was. Yeah, 85, 89. Let's just say that. And this is a buying opportunity for me. So some of my dividends will be reinvested into CHPY, and some of my dividends will be used from CHPY to buy dividend growth stocks or high yield stocks. So starting that process, and again, I'll show you my dividend portfolio and what I'm doing, but right now, with CHPY being such a good deal at 69.15, I'm going to kind of hope the dividends start hitting that and reinvesting to help build my dividend portfolio. Now, again, I am in the positive still overall with CHPY, but there's no guarantees because, again, those semiconductors went really down, or they got hit pretty hard in a sell-off. And at one point, at the lowest, it was 52.37. Do I think it'll get to that point again? I doubt it. But again, these semiconductors are very volatile and they're in high demand. That's the one thing. And I have some of those in my growth portfolio. And again, with semiconductors, the high demand, this is a no-brainer to reinvest. Now, will the NAV go back up? I don't know. Again, but looking at the trends with semiconductors, I hope so. Things have gone really positive for the semiconductor area. And I did really well with SOXX. I got a pretty good profit with that. I sold it. And with CHPY, this one is weekly. I'm actually a little bit down with SOXX, and I'm sure that'll go back up. But this one is doing really well. And again, since inception, it has done extremely well. So it's not like this ETF has done bad. And again, the sector, very volatile and high in demand. So that's the one thing. People need semiconductors. They're making money. They're making the earnings report with a lot of these stocks inside CHPY has me happy, which I'll jump to. And again, I'm going to be clear again, don't buy things because I buy things, but again, the semiconductor portfolio option income ETF actively managed to generate current income and capital appreciation through a focused portfolio of approximately 15 to 30 publicly traded semiconductor companies. So again, semiconductors, they take a real big hit. This is going to take a hit. Latest distribution, 40.23%. As long as the NAV in these ETFs do well, this will do well. Again, there's no guarantees. And again, the most recent distribution was 100% return of capital, which I'm happy about. Now the distribution has been down because the NAV has been down. But the good things are, again, weekly income, diversified portfolio, and growth opportunity. Now we have to watch out for the expense ratio of 1.03%. So be aware of that. You see with the NAV doing well, it was going up. Now with the semiconductors taking a little bit of a hit, it's been dropping a little bit. So this is a really good reinvestment opportunity for me for these ETFs. So I'm going to get some of that income to buy shares, and I'm going to use some of the income to also buy my high yielders and my business development companies. So again, if you look at the NAV, it has been in the 30s and it's gone up. So that is promising. Is it guaranteed that it's going to stay up here? No. Are the semiconductors in demand? Yes. And once I jump to the holdings, this is the big factor. Look, NVIDIA, I think it's undervalued. I have a lot of shares in NVIDIA in my IRA, one of my IRAs and my growth portfolio. AMD's up there, Broadcom, LRCX, Micron, Marvell Technology, Intel, ASML, United Micro Electronics Corp, KLA Corp, all these holdings, okay, here's some of the stronger holdings. These holdings, if they do well, this will do well. Now, the surprise is NVIDIA. Now, NVIDIA is one that's been down, and this is a buying opportunity for my growth portfolio and my IRA with NVIDIA. There's a lot of potential with NVIDIA, and I've done really well with NVIDIA. It's just a matter of when. Again, look at these holdings that are really good. I mean, these are good companies. So that's the one thing that we have. And again, with the reports of the massive sellout, I'm not too worried. And again, looking at my dividend portfolio, I am in the positive with CHPY. Look, I have 588 shares on loan, so I might be generating some income from that because I'm loaning out some shares, but I'm still in the positive at the moment. So again, with reinvesting, buying shares, doing this again and doing this again, I want to get to maybe 1,000 shares. I feel very confident that long-term wise, CHPY, again, as semiconductors take a hit, now I feel way more confident with CHPY than I do with Alti. I'll just be very straightforward with you. It's a high yield. But again, the long-term wise, I'm not excited about completely earning income with CHPY. That's great. But again, what I brought up with consistency, I like that with the dividend growers. And the dividend growers are more consistent. I know what to expect. I know what I'm getting out of it. So I'm hoping that the income in the long-term wise, that the dividend growers overpower these type of ETFs. So if I jump to my dividend portfolio, my ETFs right now at 49%. Then I have my high yield merger that I have with like Altria and those. I don't know what happened, and M1 Finance is going to have to explain this to me, but I moved this out of the pie, the income firepower thing, and all of a sudden it started to sell my shares. So I have no idea. They're going to have to explain that to me because that's never happened before with moving pies out, because I didn't sell shares, but it automatically made me do that, which doesn't make any sense. And they have some things they got to fix. But again, I'm not doing any margins, so I'm just letting you know. Did no margins. This is just money into my dividend portfolio that I put in there and reinvested. So going to my distribution as king portfolio, my section, we have CHPY right here, FEPI, SEPI, AIPI. And I'm hoping to buy more shares once I get up there. Again, this is starting to reload again. And there's ROCQ right there, up there. So again, I'm starting to reinvest, starting to load up, starting to add some of these juggernauts to my dividend portfolio. I'm getting that income, getting that NAV, steady NAV back. And remember, OVL has beaten the S&P 500. So putting that type of money in there and reinvesting. So you see, right here, CHPY, you have AI, SEPI, FEPI, GPTY. So yes, I am buying shares again, just slowly. But again, these are the real winners right here. These are the ones that I want to win long-term wise, because they're a little bit more consistent. And again, a certain sector or a certain section like CHP, the semiconductors hit CHPY, I got these guys to back me up. So these are the focus dividend growth, consistent, things that have done well against the S&P. That's what I want. CHPY has done well against the S&P. It's been proven. SOXX has. But again, with this one area taking a hit, the other ones are going to cover for it. So that's the one thing of having a good balanced portfolio. High yield, dividend growth, high yield dividend stocks, and being well diversified. That is key to having a powerful dividend portfolio. And one more thing I'll show you. Right here, I've earned a total of $5,526.81. So I still have some stuff coming in. But again, I just want to be very straightforward. You know, CHPY takes a hit. You go all in with YieldMax ETFs, you're going to get burned sometimes. So you have to be aware of that. That's why I'm not all in CHPY. That's why I'm starting to buy dividend growers, high yielders again. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I'll see you tomorrow with a video. Take care and have a great Tuesday.